All right, everybody. Welcome to the Smart Money Closing Call. My name is Jacob Gabbard from Invest with Jacob. We do this every Monday through Thursday, 3:55 p.m. We go over the close here, last 5 minutes of the market. We'll go over the ES, the NQ, and a couple extra charts. If you guys have some charts you want to see, the first two in the chat are always the ones I take. Unless they're repeats from yesterday or the day before, we would like to get some different charts up. So if you have one on your mind, throw it up there and we'll take a look. On the left, you have your ES daily chart. On the right, the ES 5-minute chart, just so we can see the close as it happens. Look at all this massive selling today. Man, massive selling. This is like a sell-off. Not really. It's at least some red bars, at least some selling. They at least found a high and then rejected and moved down a little. So tiny bit of weakness. Tiny. Nothing to write home about just yet. You do have a red bar today, so that's something. These are days, by the way, I told my group early in the day that this was what I call a Mag 7 versus the market day. What I mean by that is the ADD was declining right from the start of the day. You saw it hit at about 400 positive and then drop immediately negative and go down to about negative 300. And what you had at that time was a slightly positive market. The NQ was green, the ES was about flat, and the market was trying to move up to new highs. So what I told my group at that time is, if you look at the Mag 7, Nvidia is very green. Meta was much more green than this. Microsoft is very green. Netflix was slightly green. Amazon slightly red. Tesla was very green. Apple was actually a little bit green earlier, now red, and Google was red. I said this is a Mag 7 versus the market day because you have a green, strongly green Mag 7, and then the rest of the market, the ADD is going down, the RTY is getting beat up, and the ES is doing poorly. So the Mag 7 was bench pressing the market. So what you get there is you get a choppy day. So we got a whole bunch of chop at the start of the day. They finally gave in. The Mag 7 weakened a little bit, and you saw a little bit of a drop on the charts. So when you have a Mag 7 versus the market, when the markets are not in sync, in other words, you have the Mag 7 green and the actual overall NQ and ES are kind of red, and the RTY is red, then that is a day that you're not in sync because the Mag 7 is what's holding the market up. And you can see the RTY and the ADD dropping. So what you're going to have is a clash of two markets going at each other. So you're going to get a lot of chop in that way. You're going to have, the Mag 7 so big and so much market cap that they can hold the market up by themselves. So if the Mag 7 isn't red, you're not going to get a sell-off. So you may get a drop. We got a little bit of a drop today. I mean, I certainly wouldn't call it anything crazy, but you may get a drop, but you're not going to get a sell-off. You have to have the market in sync to get a sell-off. So if you were shorting today and hoping to see an absolute crusher to the downside, you had a very, very strong clue that that was not going to happen. You were just going to get a choppy move down or a sideways action. So just a heads up there. If you're looking at the market and you want a clue as to what the market's going to do for the day, at the open, give them about 15 minutes, let the first kind of 15-minute bar close, and then take a look at the ES, the NQ, the RTY, and the Mag 7. And you can look at banks and Dow Jones Transports as well. If they're all green or all red, you are much more likely to have a trend in that direction, especially if they're strongly green or strongly red. If they're all mixed, you're much more likely to have a choppy market. So we have negative 27 close on the ES, on the NQ, negative 46. So nothing really on the NQ, basically a flat day. And ES was down about 0.4%, so a little bit better of a drop there. But we did get a red bar, so that is something. Overall, nothing's really changed today. Didn't move the needle at all. It was mostly just a consolidation day, quite frankly. After a big, strong move like yesterday where they ran through all of those targets that we talked about if you watched the live stream, when they do that, the next day is very likely to be choppy or rejection, one or the other. Today it happened to be choppy. So sideways day, nothing has really changed. If you've been following the stream, we're looking for a pullback. So this could potentially be the start of it, but it's certainly nothing that I would be like, yes, this is the pullback we've been looking for. It's just a red day for now. If they can continue and follow through tomorrow, getting below this breakout candle right here at 72.96 would be the first major step in the right direction for the bears to start a pullback. Again, that pullback we're looking for around the 7,100 to 7,000 zone. If we move our fibs up to where we are now, because they have to keep moving up every day. 7,000 is where our target is for the wave 4. So again, if you're new here, we have an A, B, C that's built to the upside. We're in what we believe is 3 of C here. We'd be looking for a wave 4 down towards 7,000, and then a wave 5 towards 7,600 at this point would be a pretty viable target. Can they extend to 8,000? Yes, that is on the table, especially with the NQ getting so close to 30,000. I'm pretty sure we're going to hit that before any kind of major drop. Just because it's psychological, they're not going to get this close and fail. That generally doesn't happen. The only time it did that I can remember was January of 22. We got to like 49.50 or something and dropped down from there off of that 5,000 number and did not hit 5,000 on the S&P, which was kind of interesting. So they could pull the same trick again. They're famous for that, but getting so close to 30,000 on the on the NQ, I think will get us there. Same 3 patterns that we've been looking for here. Right now, we're just in an up pattern. There's nothing to talk about on the move up. It's up. That's it. We're waiting for the next pullback. The next pullback could be a wave 4. That's kind of the primary path of what you would expect to see. Again, if you go back and look at October of 21, you saw an exact same move of this. We'll look at it real quick. There ain't a whole lot to go over. It's all the same story from yesterday because nothing really happened. So if we go back to 2022 or 2021, excuse me, right over here, 2021. In October, you had this. This is not October. Where's October of 21? Way over here. I went too far. In October of 21, right here. So you had this exact same move up. You had a spike up, a pullback, and then just a whole bunch of green bars in a row. Then you had the pullback for wave 4. That's what we're looking for now. This is the primary path that we're looking for on the current market. And then you had your wave 5. Then you had your ABC corrective move down, and then one more high after that, and then they sold off really, really strongly after that. We were following almost this exact same pattern, only stronger because every bubble is bigger than the last, if you did not know that. So as we go back to today, same type of thing. We're looking for that 4-5 pattern at the top that gives you a little pullback and then one more high. Then we'd look for one drop. Okay, so we'd be looking for the potential 4-5 would be the primary, and again towards 7,600 or so. Again, 8,000 is on the table, but I think they would have to extend a little more to get there directly. The alternate would be that we got a 4 right here in a choppy kind of sideways pullback in time. Okay, and in that case, you would still get a pullback to about here, and then a bounce, and then a failure. And that should target about 6,800 if that's what we're going to get. And then from there, it'll be decision time for the market. This is the second part of that October pullback we looked at, and then they went up to the new high before selling off. This move right here, I would like to see after the 4-5, but if it comes directly, so be it. We'd look for that high and then down. And this pullback back to the highs, I think, would target 8,000. So just an FYI there. A short pullback to the highs, I don't think we'll get there. So that's the 2 bullish paths. The bearish path looks exactly like this that we have on the screen, and then the bounce fails probably right about this level here, and then turns down sharply. And that's what we saw after the highs in 2021 that we just looked at. So you had the pullback, the high, and then the breakdown, but we're looking at all the potentials so that we know where the market tells us which path is right. And that's what's really important, because I don't care if the market goes up or down. I'm not here to tell you exactly what the market's going to do or to be right or wrong. I'm here to tell you ideas of what we're looking for and why, and what the key levels are for those. And then you have to take those ideas and get a setup, and then we trade. All of this right now, you don't have to trade every day. Sitting cash, that's what we're doing. We were long for a lot of this move up. We got out around this consolidation point, and now we're just waiting for our next trading opportunity. So sitting cash is a very strong position, especially when you're in one-way markets. Let's see here. NVIDIA, not sure if you did it in the last few days. No, I haven't. We can do NVIDIA today. Jacob, would you be interested in doing a big picture video again? Yeah, I can do one. We'll do that maybe next week. How do you count this in pre-market from pre-market high, wave 2? That's a afternoon call question, Sean. This is big picture stuff here. How about ENPH in phase? Sure, we can do that one. I don't know that one, but no problem. We can do it. Please, could you show how the squeeze sniper performed today? Yeah. Well, no. The answer is no. And the only reason it's no, it's not because I don't want to show it. It's that I'd have to pull up a whole new chart and set everything up, and I'm trying to keep this kind of consolidated. But remind me tomorrow. We had a day trade on Pivot Point Pro that was a winner, and there were a few sniper trades as well, but I don't have that chart handy. So unfortunately, no. Normally, I'll show all of that stuff. I just don't have it handy right now. Sorry. In Q. Oh, well, you know what I do have is I have the newer version of Sniper right here. Yeah. So the new version of Sniper is this trade. You can see the trade log right here. And today there was a trade that was a winning trade. So we had a winning trade that started all the way back at 72.28. We took a bunch of wins in there, so we reload on it as well in the new version. It ended up cashing out at 73.36. So we got in at 72.28, got out at 73.36. The net points on that is 37.25 realized, and that's based on how we ladder out of our trades. So we had no heat on that. We just sat and got to watch the market go up, made 37 points over a couple days, and it was pretty awesome. So we had that one, and then another winner last night that started in here and got us 5.4 points. And overall, over the last 3 weeks, we are up 179 points on the new version of Sniper. And if you're trading the, if you're looking at that as the ES, which is what I trade, that's 50 points, $50 a point. So it's almost 10K over 3 weeks, and that's only for one contract. I'm trading several contracts. And on yesterday's video, I showed the cash outs or today's video. I don't know. I showed it on one of the videos, the cash outs from my prop firm account that I use Sniper on. So the new version is here. It's not released yet because it's still not fully done, but it is crushing. It's hitting at 70% over the last 3 weeks with a net of 179 in points. In Q, same thing. Looking for a pullback in wave 4. Targeting 26,930, so just call it 27,000 to be easy. Then back up, 30,000 is the target. From there, we also have the ABC and then higher. I don't think we're going to get this. It's certainly possible, but if they do, they're looking at 31, 32,000 if that happens. And then the third path would be similar to the ES, down, fail, up, and then back down. So NQ is going to be on the same pattern. These charts trade in step. They follow essentially the same paths. Okay, so we had 2 charts here. Let's go to NVIDIA. So NVIDIA held where it had to hold. We talked about this in my room. This support right here was the wave 4 kind of sideways support. They took it up, pulled back in wave 4 back to this. So this is, just so you know why I said wave 4 twice there. This is wave 1, 2, 3 of 3. This chop is 4 of 3, 5 of 3, wave 4, and then we're looking at wave 5 towards 230 would be the target. I said as they pushed up, they needed to hold this support when they pulled back. They did, and now they're pushing back toward the highs. I would expect NVIDIA to make another high. That would be a much more complete structure, and we'd look for 230 overall. However, if at any point they break down below this low at 194, that would be a failed breakout, and it's very likely at that point we're headed back to 166 to see what happens down here at these lows. And then the other one was ENPH. In phase energy. Let's see. I'll have to zoom out and see a little bit more of this one. Hold on. I don't do this one. Oh boy, this is a bad one. This is dirt, is what I would start with. So these kind of stocks are dirt because they have shown no life and they have given back their entire gain. I don't know what they do it in phase, but they clearly had their bull run here. So you got 3 of 3, 4 of 3, 5 of 3, 4, and 5 up. Okay, so then you complete your super cycle, you sell off, and then they are completing that sell off. This looks like the 5th wave of that C. They have shown no life off of these lows. Now, if they're going to hold the low here, what I would say is I could look for a bounce. You know, they can definitely bounce. I wouldn't be looking for anything bullish yet. Just because they're down here doesn't mean that they can't get better. I just don't see anything that makes me excited about it just yet. Let me zoom in just a little bit. Yeah, this looks like a pretty clear corrective move up. So the best case I would have for this is an ABC up for now, and that would be the first phase and then we'd have to re-examine. So at 50, I would target 57, assuming they can hold this low at 30. As long as they hold this low, 57 would be the target. Now, after 57, can that just be an A wave and then they pull back in B and then get C higher like that? Yeah, they can do that. This would be A, B, C for A, and then B, and then C. So that could definitely happen. I don't see them going back to the highs yet. This structure is not very good for that, in my opinion. That is a high level view. If I dug in, I could maybe find something a little bit better. But overall, this is not something I personally would want to be involved in. It's way too dirt to short, and it doesn't have a good enough structure for me personally to long. But if you were looking for a trade, the one I would take is, especially given where they're at right now on the daily 200, trying to get above it. This is a pretty heavy resistance zone, so if they get through it, they're likely to squeeze at least back to this high, and I would say 57. So they're at 35 right now. The stop would be 30. So you'd have 22 points of upside, 5 points of downside. You're getting about 4.5 to 1. That's a fairly good risk reward for an ABC setup, and this should be a C wave, which should be explosive. So you could take it for a few days. If it doesn't start to explode or move through these moving averages, then I would want to not really be a part of it. I don't want to be a part of it anyway, but if I was forced to trade it, that's what I would look at. Is an ending diagonal from the recent bottom possible, Jacob? Thank you so much for your time and help. Yeah, so it is. We're in an ending diagonal in a much bigger picture. So if you're talking about the lows from back in March 31st of this year, then yes. So an ABC is what we're looking for. That's why it's an ABC pattern up instead of a 5-wave pattern. We are in a giant diagonal in the bigger picture, and I'll do a bigger picture video next week. But off of the 2022 low, they got down into wave 1 territory there, and that's why so many people were calling the top, including myself, because very often when you get into wave 1 territory, it invalidates the whole structure, and the only way for it to go higher is diagonally. And that's okay. It can happen, but on structures that big, it's really, really uncommon. But the market chose to be uncommon, and that's okay. I don't care. Like I said, I don't care if the market goes up or down. I'm telling you what I see. And then when the ideas play out, we adjust accordingly and trade against the idea. If you have a bias toward the market, you're going to lose as a trader because you're trying to force your trade into a market that's going to do what the market wants to do. It's very much similar to the news. If you have a news bias, CPI is going to be good, so I'm going to get long. Earnings are going to be good, so I'm going to get long. You're going to get smoked. And we saw that. We see that over and over again during the earnings season where somebody comes out with monster earnings like Meta or Microsoft, and both of them found themselves down 5 or 6 or 8% or whatever. I realize there's other issues in there, but their earnings were spectacular. Once that low came in 2022, we take the most probable path. The most probable path was a failure of the high and a continuation down. Obviously, that didn't play out, but they had to build a giant diagonal to the upside to prove that wrong, and that's what they've done. And this is the 5th wave of that diagonal and the 5th wave of that diagonal. So it's very convoluted, but the long answer to your short question is yes. 5 ways into the last portion if you look at the micro, sir. Thank you. Are you talking about ENPH maybe? It's 5 waves, by the way, not 5 ways. Like a surf a wave. Who asked for ENPH? Oh. And is an ending diagonal. Oh. I'm confused, Lake Show. You asked if it was an ending diagonal, and then you said 5 waves into the last portion if you look at the micro. The micro is, so yeah, remember, diagonal's ABC, right? A, B, C. What's the C wave? C wave is 5 waves. So this should be 5 waves. You should have a 5-wave move up off of the AB setup. Is tech going to die out? Yeah, everything does. Now, you have to remember a couple things about when you say die out. Did the internet die out? I think the answer to that is obvious. But did 1,000 .com companies die out in 2000? Maybe more. And the answer to that is yes. All of the tech companies will face pressure. I mean, you've seen it in Netflix already. They were down 50% roughly off their highs. Meta was down like 30%. Microsoft is down like 30%. Nvidia's doing well, Google's doing well, Apple's doing well, Amazon's doing well, but the other 3 are getting beat up pretty good. Tesla got beat up pretty good. You're going to see tech take hits, big hits. Now, if you go back to the .com bubble, there were survivors, Amazon, Apple, some others. that survived the dot-com bubble because they were solid companies. So when you want to talk about fundamentals of a company and you want to talk about earnings and you want to talk about profitability and PE ratio and blah, 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 that's what we're looking at. We're looking at long-term investment in those companies. In the long term, are those companies going to be okay? Yeah, they're going to be okay. In the short term, can they get beat up? Absolutely. So when I say the earnings don't matter, it doesn't mean that they don't matter to a company or a stock or how to trade or anything else as far as long-term staples that you invest in. It matters in the day-to-day how the market moves and understanding the market dynamics. The market is priced months into the future. They could care less what happens today because they already knew most of it was going to happen. Now, are there shocking things like 9/11 that happen out of nowhere? Sure, of course. But for the most part, the market's pretty aware of the world. And if you think that today's headline did something to the news, I can tell you I was calling for oil to go back up well before we invaded Iran. Well before, because the structure was there, the inflation was there, it was going back up no matter what. All of the things that you think Trump or wars or headlines or anything else cause, I disagree vehemently. But that's my opinion, and you can disagree with it. That's okay. You don't have to trade or think the way I do. I just try to help educate you on logically looking at the market, because you can't logically explain to me how those things work sometimes, but not all the time. It's like saying you're at a stoplight and saying, okay, it's getting ready to change. And then it changes and being like, see, I'm magic. Because you probably said change 25 times before it changed. And then the one time you said it changed, it happened to work out. It looks like magic, right? Well, that's not really magic. That is luck. The market's not luck, though. It trades on very specific things. What's the new script for the downfall? Are you saying like what is going to cause it? Is that what your question is? What's going to cause the downfall? Since you have laughing faces, so I'm guessing it's a joke. But if if you want to know what I think it is, honestly, I think it's not AI or tech at all. And there's a lot of people who know what I think it is. I think the secret bubble is banks. Honestly, banks are in very much trouble, and you're seeing it bleed into tech. You're seeing Microsoft, or Meta rather, and I believe Oracle's the other one, have credit issues with the credit defaults and stuff. Those are all things that go through banks, but that's not even the problem. I mean, it's bleeding into them, but the problems are retail, money, debt. You're seeing used cars default at the highest rate in history, credit cards defaulting at the highest rate in history, people running out of disposable income, commercial real estate defaulting at the highest level in history. By the way, a ton of commercial real estate loans come due this year that will not be met. Very much like the housing crisis of 2008, we're going to have a commercial real estate crisis. Shadow banking is rearing its other ugly head. You're already seeing firms like BlackRock saying they're having liquidity issues and canceling withdrawals for years. You're seeing several. Blue Owl did that. You saw Tricolor go out of business. They're a auto lender, one of the biggest ones in the world. They have tons of debt on the bank sheets. JP Morgan and Bank of America specifically. The shadow lenders have a ton of debt on Bank of America's debt sheet. If you're in Bank of America, I would get a new bank personally. I'm not saying they will go under. I'm saying they are very exposed. Very exposed. So I think banks are the problem. But AI is going to be fine. They're going to go through their boom just like the dot-com bubble. They're going to crash just like the dot-com bubble. And then there's going to be the survivors of the AI. Is it going to be Claude or ChatGPT or Grok, or there's 1,000 AIs out there? Which ones will survive? It's like crypto. Which ones are surviving? Bitcoin, XRP, Ethereum. And then after that, who knows? The rest of them will probably end up going under. But it's just whoever the survivors are after the downfall. I mean, we're spending over $1 trillion on AI right now. The spending is far outweighing the earning, and they haven't proven their path to income yet. So a lot of these companies are going to go bankrupt, and that's going to be the problem. So those are just my 10 cents. I would have given you 2, but that wouldn't have been enough. So inflation, guys, inflation. Got to give you 10 cents. All right, we're going to call it for today. This is the last one of the week, everybody. Have a good weekend. Get the heck out of the house. It's beautiful out here. I hope it's beautiful out there. Have a wonderful weekend. Happy Mother's Day to any of the ladies who are watching, listening, or all of your wives, daughters, sisters, whoever. Happy Mother's Day this weekend. Have a great Mother's Day. Have a great weekend. We'll be back next week. Thanks, everybody.